Good morning, traders. Welcome to the live stream. My name is Charles Goff. Today we're going to talk about the ES and the NQ and what they might do intraday today so that we can look for some opportunities to make us some monies. Well, to start things off, I've got a beautiful song for everybody. I've lost that bullish feeling. Whoa, that bullish feeling. So we talked about this at the end of the day yesterday. The fact that the market, what it did for the first half of yesterday was all very bullish. We poked up and we made new all-time highs, and then we basically just spent a majority of the day spending time and bringing in volume at those new all-time highs. So that's all very bullish. Right up until the last hour of the day where the market did something we call a spike down, where it went and it made a new low in the last hour of the day. So that is anything below 69.76 is considered the spike down. So when we get a spike down at the end of the day, if we were bullish prior to that, that is our first sign that the momentum up is likely over. Okay? The second sign that the momentum up is likely over is if we open the next day and we're either inside the spike or we're below it. Today we opened below it. So that is a confirmation the momentum up is definitely over. We're done making new all-time highs. So the next question is, what comes next? Is the market just going to go sideways here at higher prices, or do we need a big dip with price? And so that's where we start to talk about the gap down. So now we have a gap down this morning, the gap being from 69.54 to yesterday's regular trading hours low, 69.59. That 5-point gap, that will tell us what comes next. So if we get a gap and go, meaning the market opens and it just immediately sells off and it never comes back and fills that gap, that is the most bearish scenario. And that will increase the odds this market is going lower in the days ahead, throughout the day today and in the days ahead. If we get a gap fill, where we come back up into yesterday's range, but then we get resistance and we start coming lower, that too is very bearish, that we're heading down to the overnight low. Okay. That's not as bearish as a straight up gap and go where we don't fill the gap, but it is still bearish to see. Okay. So if either of those scenarios happen, we are bearish today, and the target to the downside is 69.35. Okay. If the market fills the gap, and it gets inside yesterday's range and it doesn't get resistance there, it's able to spend time and bring in volume inside yesterday's range, well, then it's sort of neutral between yesterday's low and the base of the spike up. We assume if we can bring in new buyers here, we should be able to get to 69.76. But if that becomes resistance today, then it's bearish. So pretty much asking myself the question, are we going to go, make new all-time highs today? Are we going to go sideways, inside the upper end of the last two ranges? Or are we going to pull back and head lower today? My vote right now is for sideways to lower. I will become bullish if we start to get new buying above 76. And if we immediately get resistance and go, I'll be very, very bearish. If we come back up into yesterday's range and then get resistance at 76, probably we're not going to go that far. We'll probably just go sideways. So if we get resistance at 76, it's sideways. Or if we get a look below and fail of the overnight low that comes back up, it's sideways the rest of the day. Until we see otherwise, we should assume this market is going lower. Okay? So for now, at this moment, our main focus is on filling the gap. Can we get to 69.59? And then once we do we get resistance? Looks like we're going to get that gap fill right now. So we are watching this area around 59 for resistance. If you have not yet, please let me know in the chat where you think the market is going to go. Yesterday morning at this time, everything looked so bullish. 50% of you thought the market was going to go higher. Like 30% of you thought the market was going to go sideways, and less than 20% of you thought the market was going to close below 75, and we ended up doing it. So please answer the survey today because it was an excellent signal yesterday. Answer it honestly. Where do you think the market is going to go today? Do you think we're going to close above 90? Do you think we're going to close somewhere between 40 and 90? Or do you think we're going to head down and close lower, below 40? Where do you think the market is going to close today? We got a gap down, and as of now, it's a gap and go. Vote now or forever hold your peace. And please vote. Again, no one will know what you chose. And your opinion does matter, as we learned yesterday. Drum roll. Brrr. And the answer is, wow, not dissimilar from yesterday. So 54% of you think the market is going to go sideways and we're going to close in between 69.40 and 69.90. 23% of you think that we're going to close above 90, and 23% of you think we're going to close below 40. So it's pretty evenly split today. There's a lot of uncertainty in the chat. I am with the 50% that think we're going to close in between 40 and 90. Like I said, as of now, just with the information I have, that's what I think. I think we're just going to go sideways. My guess is it's going to be something like this right here today. And we're probably going to chop around. But if we get new selling and we get to yesterday's or to the overnight low and we get new selling, well, then we'll know we're going much lower. Let's take a quick look at the NQ. We'll see what's going on with that chart. So the NQ is a little more bearish than the ES this morning. And the reason is because of the look above and fail. So if you were watching this live stream yesterday, what we were talking about is this balance area that the NQ has been in. And we basically said, if they close above the balance area high, well, then the market's going to keep going higher. But if we come back into the balance area before the close, the more likely probability is that we're heading down towards 25,550 or 25,450. Okay. Well, guess what we did? We marked that balance area high as 25,860 and we closed below it at 38. So that is telling us that the NQ is not ready to break out to the upside yet. We are still in balance. And if we're still in balance, the most likely place we're going to go is towards those balance area lows. So the NQ is bearish this morning, and we are now watching the halfback at 25,750 for resistance, or yesterday's low, 25,770 for resistance and continuation lower. And the ES, we are watching the gap fill, which is 69.59 for resistance. If we get it, we look for continuation lower. Tom says, hopefully we're going up, but who knows? Yeah. Like I said, not impossible. Not impossible to go up today. If we fill the gap and we get back and we fill the spike down and then we get new buying above the base of the spike, then we can have a conversation about the market going up. But right now, there is no market generated information that says that, right? We got the spike down yesterday. We got opening below the base of the spike. We got the gap down. Right now on the ES, we have a gap and go, and we have ticks below zero line. So right now, everything is pointing bearish. Not up. Will is here. Good morning to you. Rich in the house. Welcome, welcome. Jay is with us. Zoo, good morning to you. Frito is here. David in the house. Jay says, hit that like button early and often. Yes, please smash that thumbs up. Yesterday, we only had 54 likes, even though we had 100 people hanging out at one point. That's your way of telling me that half of you hate me and you don't want me to succeed. Smash that like button. Help out the channel. It costs you nothing. It's one little push of a button. But it really does help out the channel. It's a way that you can communicate with the YouTube algorithm and tell it, you know what, this guy Charles is all right. Pete the Cat in the house, good morning to you. Street Salsa is here. Derek is with us. Grizzly Bull, Laura, Auntie, Willie T, Chester, Candle Swinger, and Hustler Forever. Good to see you, Hustler Forever. Okay, this is now bearish. I do feel like it's going to come back up through the opening price again. So don't short the lows. But they just tried to fill the gap and they couldn't. They got back below the opening price and they got new selling. So that is bearish to see. I will be back to neutral if the market gets back inside yesterday's range. So it gets above 69.60 and it starts to get support there. Until then, my assumption is there will be sellers waiting right here to keep this momentum going lower. XU says, Charles, outside liquidity is bearish on Bookmap. I'm not sure what that means, outside liquidity. If you want to explain it, I'd be happy to hear your take. I don't necessarily see the liquidity as bearish here on Bookmap. Yeah, nothing's jumping out at me in particular. This looks more sideways to me. But we're taking it one tick at a time. Okay, so now we are pushing into support. Someone just got liquidated. Oh, man. Stopped out for 355 contracts. Sucks to be you, bro. Brosephine. Okay. So we got a bounce here at 42. It looks like that was not enough to reverse price. So now we're looking to test support around 38. Looking for a bounce there. The market does want to bounce and come back up because we left this low volume node right here at 69.47. Anytime we have less than 200 contracts, somewhere in the middle of the range, it's okay at the high or the low of the range. But if it's somewhere inside the range, we have less than 200 contracts, the market often comes back to that level at some point in the day. So it doesn't have to necessarily be the first move the market can make. For example, right now, the first move is down, right away from that low volume node. But just at some point in the day, whenever it reverses and comes back up, there's a high probability it'll get to 69.47. So we are looking for support and a bounce pretty soon here. Right here at 39. He says, as the name suggests, it's an add-on for Bookmap that shows the liquidity that is outside the typically visible part of the heat map. On the outside liquidity add-on, you can see the difference between asks and bids displayed on the inside corners of the active heat map. I think I know what you're talking about. Yeah. I used that in the past. I never really found it was a good edge. So I stopped using it, but have you found you can rely on that? That if outside liquidity is bearish, air quotes, the market will go down, and if it's bullish, it'll go up. Okay, so we just backfilled that low volume node. Now the question is, can they keep this momentum going to the downside? This is momentum down, no question about it. They were able to get a gap and go. They didn't quite fill the gap. They were able to get back through the opening price. They even got a liquidation after they re-entered. So if the sellers are going to remain in control, they got to do so right now. They are in control. So they got to keep this momentum going down. If the market reverses now and it gets back up in yesterday's range, well, then that liquidation brought in strong hand buyers. And that would increase the odds we're going to have a sideways day. So if the sellers want to keep this market pumping lower, they really want to smack it down, either right now or very quickly once they get into yesterday's range. They want to keep on selling. Yeah, keep on selling. Gerard says, do you go live every morning? I am this week. So today and tomorrow are the last 2 days I'm going to go live on the public YouTube like this. Normally, I'm behind a paywall, so you have to pay $20 a month to watch my lives. But yes, I do go live every single morning at the bare minimum from 9:30 to 10:30, although I often go live all day. And yeah, if I see something, I say something. So if you think that in a period of a month, I might say one single thing that'll help you get in a winning trade for more than 2 ticks, or stop you from getting in a losing trade for more than 2 ticks, well, then the membership pays for itself. There's a link in the description to join the Pirate Traders Brigade and hang out with me every day. XQ says it's just another confirmation for me. That's the way to do it. Candle Swinger says double rug pull. Not yet. Right now, the sellers are still in control. They're dancing right on the edge, but they're still in control. Matt says, just join the brigade. It's easy. It's the best $20 you will ever spend. I'm not going to go that extreme and say it's the best $20 you'll ever spend. I mean, if you go to In-N-Out Burger, you might be able to spend that $20 better, but it will be the best $20 you spend on trading education. I can promise that much. John Q says, did you hear about a prop firm that went bankrupt and traders who received payouts from them are getting clawback letters to pay it back? Oh, boy. I did not hear about that. I don't think they legally can claw it back. If everybody knew they were in a pyramid scheme and the pyramid collapsed, I think the people at the top get to keep the money. I'm not sure how that works. I'm not a lawyer, okay? Tom says, if you join the brigade, Charles doesn't sing that much. Listen, Tom's lying to you. If you join the brigade, you are submitting to future songs. Plentiful and bizarre as they may be. Gerard says you only go live for an hour and only trade the first hour of the day. No, I trade whenever there's a trade. So I'll trade all day, every day. I just only do commentary for the first hour. Because believe it or not, it requires energy and effort to sit here and answer you guys' questions. So I give you an hour where I answer all your questions, and then I focus on my own work and what I need to do to make my money for the rest of the day. Tom says it's legal. They can claw it back. Oh, no. Streets also says clawback. That's just normal in trading. Oh, this market knows how to claw back my profits. I can tell you that much. It's masterful at finding a way. What's that, Charles? You were just disciplined, waited for an excellent entry, took profits at the perfect location? Well, you know what you need now? FOMO. Why don't we get you to FOMO into the next trade, which is just stupid and you shouldn't be in it? Come on. You're playing with house money, Charles. It's fine. Stupid brain. Okay, so at this moment right now, I am still bearish. Why? Because with the exception of the ticks, which are now above the zero line, nothing has changed from the market open. We still have a spike down yesterday. We are still below that spike. We still have a gap down today, and we still have not filled that gap today. So it might feel strange to be bearish right now as the market is going up, but I remain bearish here. The only thing that's going to get me back to neutral is if we can get back inside yesterday's range and stay there, okay? And stay above 60. Because the higher probability as of now is that we'll get there and then immediately get smacked right back down. So I remain bearish until I see that change in sentiment with price being able to stay above 60. Big design knob in the house. Gerard says, but you're still explaining your trades and entries as you go. You're pretty much not answering questions on the comments after 10:30 a.m. So I don't give my trades that I'm doing live in real time at all. This is not a signal service. That's not what this is. Okay. It's market commentary. So I give you my opinion of what the market is doing. Now I will give you lots of trade ideas. You know, I will say things like, if the market can hold the resistance at yesterday's low, we're heading down to 69.35. But when we're in there and we're getting resistance, I'm not going to say short the market right now. Put your stop at 71. Put your take profit at 35. Like, I'm not going to do that. I don't literally give you trades, but I will tell you that if the market pushes into the previous day's range, the higher probability is that it's going to get rejected. And that if it gets rejected, the higher probability is that later on today, we're going to come down to 69.35. You are going to have to figure out to put your short at resistance. You are going to have to figure out to put your stop above the overnight high, and you are going to have to figure out to put your take profit at the week reference, because that's what trading is. If you're not coming up with why you're entering the trades at every level, if you're not coming up with your levels to take profit and your levels to exit trades, then you're not really trading, right? I'm here to teach people how to trade, how to actually think for themselves in real time and make decisions. So I do it in two different forms. I have a workshop that I teach, which is a 2-week, workshop where for 4 hours a day, every day, I teach lectures. That's to give you the background knowledge, right? Anything you want to get skilled at, any complex skill that you want to develop, you have to start with knowledge, right? You have to start with understanding how it works. So that's what the course is for. That teaches you all the stuff, right? How I think about markets, how I enter trades, what my trade setups are, how I manage risk, what my trading rules are for myself, all that stuff, everything you need to know to be able to function as a professional trader, as a full-time trader. Then I do the brigade live each day so that I can show people in real time the concepts that I taught them in the workshop work out. You know what I mean? I teach the fact that if you have a spike down one day, the market opens below that spike, it is bearish. So anyone who took my workshop should not have been going long this morning, okay? Because they know with the combination of the spike down and the gap down, the market has momentum down. Even if it doesn't feel like it right now, it does, right? And so then I do the live stream to point it out, to say, hey, we got a spike down. We got a gap down. That's a sign of momentum down. Where do we have support? Well, I teach that we find support by looking at cumulative volume. And then I note the levels where support is going to be. And in real time, you can watch it work out. Because the biggest problem that people have with trading education is they'll learn something from somebody. This is how you trade the market. This is how you use this tool. This is how you use that. But then when they try to implement it in real time, if it doesn't work, they give up on it. Because nothing works 100% of the time in markets. Markets are totally random. There's no such thing as anything that exists that gives you a guaranteed result, no matter how smart you think you are. And so learning to use these tools to give you an edge in your trading requires being able to know when do you pay attention to the signals and when do you ignore them. That's what the live stream is for. It's for that nuanced difference between, should I just be blindly shorting right now, or should I be waiting for the market to push up into resistance? But yes, generally I'm done talking and answering questions by, 10:30, 11. Because by that point, I will have explained every possible scenario that can happen. I will have explained exactly what to look for, and it'll just be a waiting game and a watching game, which is really what trading is mostly. Just waiting. Jason, he says, longtime member of Charles's, 4 years. He often does commentary past 10:30. If the market is moving and the action is plenty, he sticks around. Once we are rotational or in chop, he stops, or he steps away from the stream. Yeah, that's pretty much it. It is something that I do with my own trading as well, where if, there are times where the market gives us good, clean trade setups, we understand what the market is doing, and it's easy. When those times happen, I lean in as a trader, and I take every single setup. Like I take it. I take as many trades as I can. I lock in as much profits as I can when I'm in the flow of the market and things are good. But when I'm looking at a chart and I'm like, ugh, this is annoying, I don't understand, this is frustrating, I just walk away and I just don't trade. And I honestly believe that's a superpower. I believe having the ability to go all in and be hardcore in the moments where you have an edge and being able to do nothing in the moments where you don't, that's actually where success in trading comes from, at least day trading anyway. The money is made in the waiting. It's not made in the buying and the selling. All right, let's take a look at spot gamma, and we'll see if there's any data we can collect here. Not really. Okay, yeah, so no clear seek and destroy levels on the SPX right now, meaning there's no level that is working as a magnet that is going to try to force price to go to it. It's looking pretty even. But at this moment, the hero line is pointing down. So as long as this hero line continues to point down, we should assume that they are selling calls and buying puts and that the price will follow through. If this thing turns around and comes back up, particularly comes through zero, then we'll know it's sideways. So this is still looking slightly bearish to me. Looking at the options. Tom says, be honest, Charles, you like doing the live streams because you like to sing to an audience? I'm going to be honest with you, Tom. I sing no matter what. I could be alone in the shower and it's going to happen. Okay? So I don't need an audience. XU says, Charles, are we in a D profile? Okay, so by D profile, that's what we generally call a bell-shaped curve. Okay, we just call it a bell-shaped curve because we think it's like a bell on its side. You know, you think about like a bell. Ding, ding, ding. So we call that a bell-shaped curve. And it's too early, in my opinion, to make predictions. So if you're looking at the shape of the profile to try to understand what is the market going to do today, you really need to wait at least a couple of hours. You need to give the market a bit of time. What you have to understand is right now, the market is trying to decide one of two things. It is trying to decide, so this was momentum up. Okay. It's now balancing off that momentum. And it's trying to decide, is it going to do that by going sideways up here at higher prices? Or is it going to do that by pulling back with price? This is what always happens. You get momentum, and then one of two things happens. You either go sideways or you pull back. We call the sideways balance with time and the pullback balance with price. So right now, first hour of the day, what the market is trying to figure out is which of those two is it going to do today? We know we're going to balance. We know that because we got the gap down. So we know we're not heading up to make new all-time highs today. But the question is, are we going to sell off with price going much lower, or are we just going to chop around and go sideways, very similar to the way the overnight did last night? Probably in a very similar range. Okay? That's what we're waiting to find out right now. And it's too early to tell. We haven't had a chance. It's happening right now, but we haven't had a chance to test yesterday's low. We won't really know if it's a gap and go until we get into yesterday's range and then either get rejected or we're able to stay up inside yesterday's range. If we stay inside yesterday's range, well, then it's the sideways day. If we get rejected, well, then it's the price day. And so if it's the sideways day, by the end of the day, you will have a bell-shaped curve. You'll have a market that looks like that right here. Come on. This right here. Okay? It'll just go up and down and up and down. It'll look like that. But if we get rejected here, we could trend lower all day. We could end up with an elongated profile to the downside. Something that looks more like this right here. Okay? Could end up pushing much lower. So for the first hour today, we're just waiting to see which is it going to be. I'd say NQ is probably important here as well. Yeah, NQ is looking very bearish. So I'd say look for resistance on the NQ at 25,686. You're probably going to be tagging that right around the same time we tag the gap fill on the ES, and then we find out. Well, there it is. There's the gap fill right there. So this is the moment of truth. This is where we decide, should we still be bearish? Does the volume taper off? Do we spend very little time and bring in very little volume? Or do we push up here and stay up here? Spend time, bring in volume. Depending on which of the two, we're either bearish for continuation lower or we're neutral. And so you say to me, you say, well, Charles, how much is time? You say we have to spend time and bring in volume. How much? Well, let's put it into, relative based on how much time has passed today, right? How much time have we spent below yesterday's low today? Well, we've spent roughly 40 minutes below yesterday's low. So to spend enough time for us to know we don't need to come back down, we got to spend at least 5-10 minutes up inside this range. So if in the next 5 minutes we reject and come back down, well, we have momentum down. If we don't, we're neutral. And as far as volume is concerned, if we can turn a candle pink on this volume profile right here, while the ticks are above the zero line, that is a sign of bringing in new volume up here. If it just stays white and we head back down, then it's tapering off. Okay. So we got our first pink candle up here inside yesterday's range, above yesterday's low. When we look at the ticks, where are they? They're above the zero line. Okay. So this is showing us that buyers are stepping in up here and they're trying to take the market higher. So as far as what are we looking for to convince us that the bearish momentum is over? First, can we spend time? Second, can we bring in volume? So we've checked off the bringing in volume one, but it's still only been about 3 minutes that we've been up inside here. So we haven't been up here long enough to spend enough time. So I would give the market about 2 minutes here. If in the next 2 minutes we reject back down through the opening price, then this market is bearish and it's going much lower. If we stay up inside yesterday's range for the next 2 minutes and these ticks hold the zero line, then we're going to start to head higher. So I am still bearish, but I'm right on the edge of becoming neutral. Okay. So we've now spent 5 minutes inside yesterday's range. That's enough time. And we've brought in enough volume to turn 2 candles pink. We have also once again found support on that zero line on the ticks just now. So I am no longer bearish. I am now neutral the market. I think the most likely next stop is going to be the overnight high at 69.69. And we're going to play the same game there. Okay. If the market gets above there and it starts to spend time, well, then it's heading up to 69.76. If it doesn't, it's coming back down. I would also say bigger picture for the day. At the start of the day, we were asking ourselves which of the 3 scenarios is going to happen. Is the market going to go up today? Is it going to go down, or is it just going to go sideways? The fact that we are spending time and bringing in volume inside yesterday's range right now is the market telling us that that sideways day is now the most likely. So my guess is we're going to have a balancing day. My guess is resistance at 76, then we come back down and we probably spend the rest of the day chopping around between, 40 and 75. But we'll take it one tick at a time. Now we're just trying to get to that overnight high and see what happens there. Gerard says, so you don't let us know when you're in a trade. You just give us ideas and scenarios that can happen throughout the day. Yes, Gerard, that's what I do. I give scenarios of what could happen throughout the day. Now, you might be thinking, well, that's not going to help me at all. Well, then this isn't the right place for you. This is a place for people that are at a very specific place in their journey as a trader. They are basically just shy of profitability. They've been trading for years. Sometimes they make money. Sometimes they lose money. They understand the basics. They know how to read a chart. They know how to, enter trades. They have setups, but they just can't get consistent results. They just can't get consistent profitability. For those people, the service that I offer is very valuable. Again, worth thousands of dollars a month, and I give it away for $20. For those people, they understand the value of it. They get it. So if you don't, if it's confusing, if you feel like the only value to you is somebody telling you, go long right now, put your stop below 57, put your take profit at 70. Like if that's the only thing that will help you, then this is not the right place. Because I just don't do that. But if me explaining to you that the highest probability is the market going to, 69.70 when the market is at 69.60, if that's not helpful, well then, what can I say? Helpful to me. That's 10 points. I told you, you only have to make 2 ticks to pay for your membership. There is more than 2 ticks between us and the overnight high. Heart Medicine says, do you ever go to karaoke bars? The answer is no. I can only sing if there's no humans looking at my face while I'm doing it. Willie T says, Charles, what do the technicals tell us? To me, they look rather bullish, except for the ticks. I don't know at what point you asked that question. But no, nothing looked bullish to me because of the context of the gap and the gap and go. So this is what you got to learn. Okay. This is something that you just, every trader has to come to this realization that gaps are a sign of something. Gaps don't just happen at random. When the market makes a big move in the overnight, the next day, the market has to react to that. And there's only a couple of things it can do. So one example, if you look right here, when we had this big gap up, actually, that wasn't really a gap. Never mind. Let me find a real gap. Actually, most of the moves have been in the intraday this past few weeks. Here's a gap. So the market, was going sideways. Actually, very similar to yesterday. It made new all-time highs. It was just going sideways. It was a bell-shaped curve. The next morning, we open with a gap down. The market comes in the A period. It comes all the way up, and it reverses the same as it did today, by the way, exactly 1 tick before filling the gap. What did it end up doing? It turned around and it came all the way down and made new lows. Where did it end up closing? Around the same place that it opened, but obviously much lower than the previous day's range. So that gap is important. Okay. Nothing that you're seeing technicals wise while the market is going up matter. None of it matters if there's a gap, because all that matters is, can they fill the gap? And then all that matters is, can they stay inside the previous day's range or do they get rejected? So if I was seeing, if the market was, say, around the opening price today, the market is around here, and I see that we still have an unfilled gap, which we did. even if things look bullish in that moment, that's not a reason to be bullish at all, because all they're trying to do is fill the gap. Now, you could take a gap fill trade. You could target a trade to get to the gap fill. I'm not saying you couldn't go long, but that would be it. It would just be a quick little bite like that. Because what really matters with a gap is what happens when you fill the gap. So my question is not what were the technicals saying on the way up. My question is, once we got there, what did the technicals say? And you are right. From there till now, it is bullish because those ticks have been staying above the zero line, and we have been spending time inside yesterday's range. So since we got in here, it turned bullish. But prior to that, there's no reason to assume we wouldn't have just been rejected and continue right back down. And I used to think I'm a bad trader waiting till we get here to make the decision about what trade I'm going to take. But I've just learned I'd rather miss the trade. I'd rather miss the move up and then be better positioned for the bigger move that's going to happen later than to try to grab a move down and try to grab a move up and try to grab this and try to grab that and be guessing. Wait until the market tells you. And for us, that is when we get inside yesterday's range. Right here, right now. ES is trying to go up, but NQ keeps pulling it down. Mark says, if it helps anyone, I was one of those guys. After being in the Pirate Brigade for many years, I went full time as a trader last April, and I'm still going. Well, congratulations, brother. Step 1, become profitable. Step 2, stay profitable. This is where the journey really gets fun. But if you made it from April to now, then you're doing it. You're doing the thing. Matt says, my game has always had the market profile whole. So this is the best way to start my day, from macro outlook to target ideas. Yeah, everyone uses the information differently. Okay. So, lots of chop happening here. The market just completely reversed the momentum on us. We got back inside yesterday's range. We had momentum, but they could not get to the overnight high. That's a when what should happens doesn't. Also, when we first poked up there, those ticks were staying above the zero line. Well, now it's, back below the zero line. We're starting to build momentum down. So this is just neutral at this point. This is not enough to get me bearish. I just need to wait for more information. And I have a feeling it's because of NQ. I think NQ wants to go much lower today. As we discussed, with the look above and fail of the balance area high, I think the next move is down for the NQ. And so I think the ES and the NQ are kind of playing tug of war right now. They're buying, oil companies, but they're selling tech at the same time. If we break the B period high, we will be one time framing to the upside, and that should lead to some short covering that would get us to the overnight high pretty quick. But I'm going to give them a minute here. XU says, have I traded with footprint charts? Yes, I have. We actually talked about this yesterday, I think. Footprint charts are great. There's nothing wrong with them. I just think market profile and just using regular volume profile is easier for my brain than footprint charts. But that's just because I learned this first. So it's all showing you the same thing. It's just showing you how much volume is trading at a certain level. You know what I mean? How does that change over time? You know, when we push up to a new level, does what was support become resistance and vice versa? So it's hard to say one is better than the other. They're just two different options that give you basically the same info. Frito says, Charles, is there a chance that your clock in the upper left could be running fast? Yes, I think I cannot explain it, but for some reason, the clock on this computer is 1 minute ahead of my phone and my other computer. I'm not sure how that happens. I thought it's supposed to update itself based on the internet, but yeah, it's a minute off. Heart Medicine says, could the overnight low be a target if we sell? Ooh, not right this minute. It is a very strong target for the market today, but not right this minute. Why do I say it's a strong target for the day? Well, it's the only weak reference we have. So this is the only magnet that we have. Okay. Anywhere on the chart near us right now. So that's, increases the odds slightly that the market will come there. And the overnight, if you look last night, the overnight reversed exactly at that level. So that made it even weaker. So is there a chance that the market comes down here to 69.35? Yes, absolutely. But first we need momentum. That's the thing. We need clear momentum one direction or another. We had that in the open when the market, had a gap down, tried to fill the gap and started to sell off. We had momentum. But just now, in the B period, when we started to spend time and bring in volume up here inside yesterday's range, that was the market telling us the momentum down was over. Same thing with the ticks. The ticks staying above the zero line was telling us the momentum down was over. So the truth is, you can't be long or short right now. The market doesn't have momentum yet. It's playing tug of war. It's trying to decide. But once we have a direction, if it's up, the overnight high, extremely high probability that we're going to get there. The overnight low, extremely high probability we're going to get there if we get momentum down. It's just we don't have that clear sign yet, which way the momentum is. But we will. Just be patient. Give it time. This market will pick a direction and it'll start chugging along. It's just right now, like I said, they're selling tech while they're buying other stuff that's in the ES. So we're getting this sideways choppy thing. Let them do it until they've closed out all their orders and the market's ready to pick its direction. And of course, I will change the color of the banner on the bottom once I feel the market has picked a direction. But right now, they're just playing tug of war. Very boring for live streaming. It's much more fun when I'm like, all right, we're going to get resistance here. And then the market instantly sells off and makes the big move. But sometimes you just got to sit and wait. You just have to. You don't get a say in it. And so you sit and you wait for 4 hours for the market to finally tell you, you get in the trade, and then in the next 30 minutes, you make your money. And the money was made in the waiting, right? That's the way it works. Sook says, bearish sentiment. I don't know, man. We're just a few points off from the all-time high. So Heart Medicine says she took my class and she's now reading Markets and Momentum by James Dalton. Well, if you've done those two, you've got everything you need. Ross says, waiting is the hardest part. Truer words have never been spoken. The only thing harder than waiting to enter a trade is waiting after a losing trade to enter your next trade. That's the only thing that's harder than waiting to enter your first trade. But just track it, man. I'm telling you, just in your trading journal, make a little note. If you really should have waited for a trade, but you forced your way in too soon because you just desperately wanted to take a trade. You weren't really sure the market was going to go up, but it felt like it was going to, so you just got long. Start tracking that in your trading journal. And a month from now, go back and look and just ask yourself the question, if I'd have taken none of those trades, whether they were profitable or not, if I took 0 of those trades where I was forcing it, would I have better returns? And I guarantee you would. So learning to not trade is an enormous edge when it comes to profitability, because anybody can take profitable trades. Anybody can find a chance where the market's going to go from here to here and they can lock in profits. The hard part is keeping those profits and consistently making those profits. And the way you do those two things requires waiting, which is the hardest part. Psy Worker says, if we can hold here, then the next step is 78 in the second attempt for 7K. Yeah, 78 is too far for me right now. So as I said, this is the way it's going to work. C period gets above B period high. We are now one time framing. The odds, if we start one time framing, that we get to the overnight high are extremely high. Okay. I'd give it better than 90% chance. If we start one time framing, we will get to the overnight high. However, it does not mean we're going to keep going beyond there. We could just as easily get above that overnight high, even if we're one time framing, even if it looks as bullish as can be, we could still reverse and come right back down through the opening price. Okay. We can't truly be bullish. We can't even think about 7,000 unless we can get above the base of this spike down. This level right here is very important. It's been important since 3 o'clock yesterday, because this is where the market told us the up momentum was over and the down momentum began. So if you're going to go long here, you should lock in profits quickly. If the market gets above that overnight high and it gets new buying, you can get long again, but you should lock in profits quickly at the base of that spike down. Only if we got above the base of that spike down and got new buying could you really be like, okay, we're going to the moon. Because as long as we're inside this spike, the daily momentum is still down, even if intraday it's up. And by the way, speaking of intraday momentum up, look at these ticks. Does that look like strong momentum? Like we're going to go higher all day long? Not really, right? So I suspect we'll get to the overnight high, and only if we get new buying there will I suspect we can get to 76. And prior to getting there, my assumption is that's going to be resistance and reverse us back down. one step at a time. Candle Swinger says, I always get back to break even in the waiting. I'm not sure I understand that. So by waiting, I mean, don't take trade. You can't lose money if you're not taking trades. But different people have different personalities when it comes to executing intraday. I know people that the best way for them to trade is to, as soon as they have a winning trade for the day, like they're up, they're green, they should just stop trading. Just straight up stop right then and there. And like they've got some profits, whatever that may be, whether it's $20 or $2,000, like they've got profits, they should just stop. Because if they keep trading, they will give those profits back. They just will. And that's called over trading. They just keep trading and trading until they run out of money, basically. And that's a terrible way to trade. So if you find yourself in that category, once you lock in profits, you should stop and try again the next day, because then you'll be more likely to keep those profits. But I also know people, and I would describe myself this way, that when I'm winning is actually when I should lean in and trade a lot more, because that is likely to lead to more winning. And if I'm losing, I should just stop. So I have a rule that 2 losing trades in a row, so not in a day, but in a row, like I lose on this trade, I lose on the next trade, I stop trading. That's it. Generally for the rest of the day, sometimes just for like an hour or two, and then I come back. But generally speaking, if I have 2 losers in a row, that's it. I'm done for the day. Whereas if I've had 2 winners, I'm really looking forward to that third trade. I'm really looking forward to that next one, because statistics, measuring my own success in my trading journal has taught me that winning leads to more winning and losing leads to more losing. But like I said, everyone's different. So you got to figure out what fits for your personality. Tom says, isn't 7,100 supposed to be after non-farm payroll? I don't know. I didn't look at the crystal ball. Yeah, I don't think like that. I don't time things like that. I've tried to play that game of like, ooh, next week there's going to be an FOMC, and then on this day we're going to go to this level and blah, blah. I've tried playing that game. I'm not good at it. What I'm really good at is, what is the market doing right this minute? And what does that mean it is most likely to do over the next few hours? That's my sweet spot. That's where I have an edge. That's where I have consistency. That's where I get good returns. So I stay in my lane, what I'm good at. I have no idea what's going to happen after non-farm payroll. I have no idea what non-farm payroll is going to be. So I just don't even think about it. All I care about right now is, can we start one time framing? If we start one time framing, can we get to the overnight high or the overnight low? Once we get to the overnight high or the overnight low, do we get a look above and fail, or do we keep going? That's it. That's all I got to think about today. It's as easy as that. It's the waiting that's the hard part. Crypto Writer in the house. Good morning to you. Crypto Writer says, just logged in and saw the VWAP rejection towards the initial balance high with a high historical chance of touching the initial balance high. So I took a long and I exited a bit below the initial balance high just to be safe. Not on the line. Good decision not to wait to touch the initial balance high, since it did it by 0.5 point. Yes, sir. Again, I'm not here to just plug my workshop, you guys, but I literally teach that in my workshop. On the lesson that I teach about how I enter trades, I clarify that when I'm putting a profit level, it's always a tick below my entry if it's a long, or a tick above if it's a short. So if I wanted to take profits at the overnight high, which is 69.50, I'd actually put my entry at 69.25 or even 69.69. I'd actually put it just a touch below there. Now, let's say I was shorting the market right now, and I'm going to use the overnight high as a stop. Well, then I actually put it a tick above the level. Because if I want to exit the trade at profit, I just want to get to it, and then it locks it in. And like you say, it very commonly reverses a half a point before your level, like it did with the C period right there. That's very common because of the bots. So I always put it a tick below, or even 2 ticks below. But if it's a stop, I always put it a tick above. Give it that little tiny, that one extra tick. And I find that works out best, no matter what setup I'm trading, to always execute in that manner. Because just imagine if in the overnight last night, you wanted to short the E period high. If you put your stop, if you put your limit sell right there, you never got a chance. But if you put it just a half a point lower, you had a chance in the H period and the I period and the K period. Because they love to reverse just half a point away from that key level. Happens a lot with gaps too. If you're taking a gap fill trade, always take profits a half a point below the gap fill. Because they love to reverse right before it, which they did today in the A period. What bots got to do with it? Why bots got to reverse at exact levels? Because they're computers and they use exact data, whereas we're humans and we react with emotion. Ross says, for the advancers versus decliners and the tick chart, is that only for the ES or can it be used for the NQ2? Also, do you know if there is anything equivalent for trading gold? So there's not any market internals for trading gold because gold is one market. Okay. So what the market internals are doing is they're showing us what's happening with the stock market. So the ticks and the ADD is showing us what's happening with the NYSE, okay, the New York Stock Exchange. And it's all the stocks that are on there. It's not just the 500 that are in the S&P 500. It's every single stock. And it's showing us momentum, right? Are there more buyers or are there more sellers? Is there more volume going into stocks that are going up or more volume going into stocks that are going down? That's what it's showing us. Since the futures, right, trade based on those underlying shares, it makes sense to watch what's happening with the underlying shares as a way to understand what's happening with the futures. But gold doesn't have that. It's not like there's, I guess you could kind of build one using gold miners, maybe gold mining stocks. Maybe you took the gold mining stocks and the ETFs for gold and you kind of built one yourself. You could probably build something like that, but no, it doesn't exist. Because gold is one market. That's all it is. It's just one market. As far as Nasdaq is concerned, yes, they work for Nasdaq as well, and you can get them specifically for Nasdaq. So for the ticks, you can get, I believe it's called Tick Q or Tick-Q. That's for the Nasdaq. And you can also, for advancers versus decliners, I'm not sure what the symbol is, but you can get the advancers versus decliners for purely the Nasdaq 100. And yep, they would work exactly the same way. They're just another way to look at the information, right? Matt says they will say that my songs are AI audio because the lyrics are so specific. Oh, it's not a very smart AI then. Artificial unintelligence. Yeah, everything just says sideways right now. Geez, there's no clear edge. Okay, so NQ is dancing right on a really large cumulative node right now. You can just see how much bigger this node is than almost all the other liquidity. Or I'm sorry, all the other volume on the NQ. And so we're kind of dancing on that right now, and it's acting as support. But once the NQ starts one time framing lower, which I believe it will, that will probably cause the ES to start to liquidate to the downside. So I'm still neutral on the ES, but if the NQ starts to sell off here, it should bring the ES with it. Jay threw in the symbols for the NQ. Thank you, sir. So the breadth is VOLDD, and the advancers versus decliners is ADQDC. Bam. Crypto Rider says, I would say that Charles's course is the best that I took in my trading years, and I took many courses and paid for many groups. I have over 100 trading groups. I was part, many paid once before I found the really good one. Hundreds is a lot, bro. You've been in hundreds of groups? But thank you. Appreciate that. Crypto Rider says, yes, 100. I mean, I did not even know there were 100 groups out there. That's crazy. Derek says, I got a couple songs for you, Loser by Beck and Regulate by Warren G. I'll give them a try. I'll add them to the list, and on a future date, I'll try. That Beck one is tough. It's a lot of fast talking in that one. So you're a laggard boy. You're always late to the trade, and then you get stopped out immediately. So you're a laggard boy. You gotta enter sooner. Put your entry where your stop is. Thank you, Malcolm. He says, similar journey as crypto writer, maybe 8 rooms/gurus. Took Charles's course and done searching. Best investment for me. Appreciate you, brother. What do bots got to do with it? They're reversing at a very exact level. So I was actually looking for one of these yesterday as an example, and I didn't get a chance. This is what it looks like when the iceberg is still there. So somebody had asked, how are icebergs an edge in trading? Well, here we can see somebody has already filled 105 contracts short right here at 66, but they're not done yet. The fact that it's still there means the software is picking up that they still have orders in the order book right at the high. So that tells us at some point the market knows there's liquidity there. It can see it. So even if we get a push away, the market is likely to come back for that high once again because that iceberg is there. So that significantly increases the odds that we will start one time framing. The problem is timing it. Are we going to start right now or are we going to start 20 minutes from now? Tough to say. So there you go. He just filled another 30 contracts, but he's still there. Just filled another 10. He's still there. Now he turned it off. You see that? He was like, okay, enough is enough. And by he, I mean probably a computer in a basement somewhere. Frito says, Charles is my third guru. The first was just for a couple months. The second was for 15 years until he passed away. Now around 3 years with Charles. Please don't die. For you, Frito, I'll just keep on living. He says I'm older, so I'll probably go first. Challenge accepted. Matt says, is it one time framing? That's a great question. So by our technical definition of one time framing, no, it is not. Okay. Because for us, the way we measure one time framing, it starts with breaking out of the initial balance. So the initial balance is the range from the first hour, and we are still in there. We spent all C period inside the B period range, and thus far we've spent all D period inside the B period range. So we need to break out of this range to officially start trending one way or another. Now, I think everyone in the room would probably say we're guessing it's going to break to the upside. That is certainly what it looks like. But let me just put it to you this way. If right now, out of nowhere, this market were to reverse and start heading lower, I would not be surprised. Now, that's not what I think is going to happen. I think we're going to break higher, but I'm just saying I wouldn't be surprised if we turned around and went lower. Why? Because we're still inside the initial balance. So we haven't actually technically started trending yet. But yes, if we break the B period high right now in the D period, then we are one time framing, and cessation is the C period low until we print the E, and then cessation is the D period low, and so on and so forth. But right now, technically, we're just still in balance. We're still just playing tug of war, basically from the market open till now. We're trying to decide which way we want to go today. An infuriatingly boring day to be live streaming. All right, guys. Well, with that, I guess I will say goodbye for today. I kind of wish I could give you, I've been knocking it out of the park the last few days with my predictions at the end of the day. And I don't really think I'm going to be able to do that today. Knock it out of the park here. Because we just don't have a clear indication yet of what the market is doing. So as I said, I think the NQ is going to be sort of the leading indicator for today. Right now, the NQ has momentum to the downside, but it too is just in its initial balance. Okay. If the D period low breaks the B period low on the NQ, I think both markets are going to start to liquidate. Okay. They bought the dip in the B period right here. They bought the dip in the C period in here. Okay. So right now there's a lot of people that are long the NQ, but they're not getting anything for it. If they bought the B period low, they didn't get even to the opening price. If they bought the C period low, they didn't even get to the B period high. So they're buying, but they're not getting anything for it. So are they going to keep buying? Are they going to buy the next dip and the next dip and the next dip and the next dip? Probably not, because they're not getting any follow through. So that means that if they come down and they break that B period low, not only will there not be more buyers waiting to buy that dip, but you're going to squeeze any of the buyers that stepped in the B and C period. So you're going to start to liquidate lower. So I suspect both markets, regardless of what's happening, if the NQ starts to break lower today, they're both going to start to head lower. And you got to understand, it's about a difference in location. The ES is sitting at all-time highs right now. The NQ is in a balance area. And yesterday was a look above and fail. So the NQ has much more momentum down than the ES does on a daily time frame. So I think it could pull the ES down later on in the day. That being said, as of this moment, the higher probability for the ES is that it's going to break to the upside because of how poor this high is. So if I had to describe it a different way, what I would say is do nothing inside the initial balance for as long as you have to. Wait till the initial balance breaks on one of these markets. Then you can start to trade it. Okay. Now, if you wanted to go long on the ES because you're like, no, Charles, I'm looking at that poor high and that sucker needs to be repaired. They're definitely heading up for that high. I would say your stop needs to be below that C period low. Okay. You can buy, the opening price, the halfback, you could even buy right at the C period low. But if this market comes below that C period low, it could liquidate. Same concept as the NQ, right? If they bought the B low, if they bought the C low, and they're not getting new highs, then they're not going to buy the next one. Okay. So yeah, I just think we got to wait this out a little bit because there's a very good chance, even though the ES looks bullish, there's a very good chance the NQ completely drags it straight down. And I have a feeling it's not going to happen for another hour or two. I think we're just going to keep dancing in here. So with that, I'm going to say goodbye. We will switch over to the private stream. Those of you that are members of the Pirate Traders Brigade, just check your email or the website, and you'll see the link to get to that second stream. I will see you over there in a minute. If you are not a member of the brigade, I know today wasn't a great example because the market's just been grinding around going nowhere, but the service that I offer is a valuable asset. It's a valuable tool for you to have in your tool belt in understanding markets. If you, in any way, shape, or form, feel lost when you sit down in front of the screen, like you just don't even understand what's going on, you should really join the brigade. $20, and you get every day, you get my insights. I will give you the guidance to help you understand what the market is doing. You can see from the chat today, people have been with me for years. They haven't been with me for years because I'm full of shit. They haven't been with me for years because I'm wrong all the time. They've been with me for years because the way I approach markets, it does work. It doesn't work all day. It doesn't work every day, but it works consistently over time. If you can learn to see the chart the way I do, you will have an edge in your trading. And we would love to have you in the brigade. So there's a link in the description. We hope to see you there. Members of the brigade, let's set sail. Everyone else, we'll see you tomorrow morning. Thank you very much.